Good afternoon. Welcome and thank you for joining our webinar on employee hiring incentives and tax credits. Rob Tiernan is our Vice President of Sales and Alliances here at HIREtech, and he will be your presenter for today. The purpose of today's webinar is to share a few details on our partnership with HIREtech and how this can benefit your company on the bottom line. If you have any questions during this webinar, please ask them using the question area of your webinar panel. They will be addressed during or at the end of the webinar and via email afterwards. With that said, I'm going to go ahead and turn it over to Rob. Rob, thank you and welcome.
Awesome. Thanks for having me, Trixie. Appreciate it. Hey, everyone. Good to talk to all of you. Thank you for taking time out of your busy schedules and in the middle of everything going on in the world and learning more about these employer hiring tax credits and incentives. I want to talk to you today about why the partnership with CertiPay makes this so attainable and so easy for all of you and what these programs are all about. So I'm going to get my screen moving. I'll give you a quick rundown intro as to who I am in a little bit more detail in a second. But then more importantly, I'm going to talk about why this conversation is so critical for business owners in the US today. And that's not even taking into account the pandemic. And then I'm also going to break down, because of the pandemic, why this is so important as well. We'll talk about the main federal hiring credits in the US. I'm going to also touch on something called the research and development tax credit. And last but not least, I'm going to touch on a few other technical credits that exist potentially for you, those of you listening to this webinar today. So that is me, that's my face. Wasn't sure if we were going to share webcams, so I always keep stock photo, but as I was introduced, I am the Vice President of Sales and Alliances for HIREtech. I have a long background in business-related things between sales and leadership, from corporate America wearing a suit every day to startup companies trying to keep the lights on and do things. So I've been in this role for just about 4 years now, and that's me, that's my story. So more importantly, why we are all here right now, why we took time out of our busy schedules, is because the business world today, there's a lot going on. And this is pre-pandemic. I mean, this is the life of a business owner, as all of you know on this call, is there's more rules, regulations, confusion, and chaos than ever before. And then back in March, we throw a worldwide pandemic on top of everything, and it makes life even more complicated, uncertain, and scary. And that's why with CertiPay, we do these types of webinars to educate all of you, to help you all out. It's more relevant than ever before, given everything that's going on. And when it comes to this tax credit story, when I do these types of engagements for employers, I kind of lead with this statement, is that when we talk with business owners, we see them losing money on the employees that they hire. And it all goes back to a couple slides ago with there being so many different rules, regulations, mandates out there than ever before. It's tough to stay on top of what all of these various tax credits are and how you can maximize them. And by that alone, we just see that there's a lack of understanding because there's so much to pay attention to in the business world today. That's why we work with a lot of CPA firms to educate them on the importance of what these credits mean and what they are. And then every once in a while, we also see owners lose money because they try to tackle these credits themselves. And again, it all goes back to what's already on your plate. To dedicate the time and the resources to fully maximize these programs, when you do it yourself, there's not enough time in the day. And last but not least, in our industry, we see others that dabble in tax credits. They're not really a true advocate for the employers. They're not fighting on their behalf. And that's why between HIREtech and CertiPay, you have such strong advocates looking out for your best interests. And at the end of the day, employers, all of you on this call, you can earn up to $9,600 per employee per certified tax credit. And that's just talking about one particular tax credit. And that's not even the full scope of it. And that's the main hiring credit in the US, the Work Opportunity Tax Credit. So that will be the bulk of our conversation today. That said, there are other state and local tax credits that are constantly evolving, they're changing, they're expiring, they're coming back and being made retroactive. And those are specific down to the zip code and the state and local level. So that's something else that currently exists for employers. And then, as I mentioned in the beginning, I'm going to touch on some technical tax credits. I'm going to highlight research and development. I'm going to talk a little bit about the cost segregation program and what that can potentially mean to all of you on this call. And again, last but not least, there's something called disaster credits, which unfortunately have become a common trend over the last 10 years just due to the natural disasters that are occurring in the US. So we're going to high level break down what all of these programs mean and how they can benefit you on this call today. So that said, we'll lead with WOTC, the Work Opportunity Tax Credit. And here's the high level overview of what WOTC is. It's good for any tax-paying company in the US, US Virgin Islands, and Puerto Rico. So we have a great audience today. You guys are spread out all throughout the US. This is the same story for each and every one of you. It's the main federal hiring credit. It's universal across all 50 states, US Virgin Islands, Puerto Rico. And the phrase behind the WOTC program, everyone, is to employ socially or economically disadvantaged individuals. They sometimes use the phrase if you face barriers or obstacles to being hired. And the WOTC program has been around since 1996. This is nothing new in the US. And a whole bunch of years ago, the Department of Labor did a study, and they said roughly 13 million people have been hired as a direct result of the WOTC program. So this has been long tenured, long standing, and there has been proven success and benefits to employers, to new hires, to everyone that's involved in this process. And for those of you on this webinar today that are unfamiliar, what we're talking about today is a credit. So as you look at the screen, you see an employer that has some deductions, so they lower their taxable income. Yes, deductions are a good thing. But these tax credits today, these are dollar for dollar reductions in what is owed in federal tax liability, truly taking away the amount of taxes that all of you owe the government. And the WOTC program is predicated on the following image. And what I mean by the dartboard on the screen is that as an employer, I have to hire someone that falls into one of the 10 target groups. That's an actual phrase that's used, dartboard, target, PowerPoint humor. There are 10 target groups. And what those target groups are is what you see on the screen. If you hire a qualified military veteran, food stamp or SNAP recipient, you have your ex-felons, you have your long-term unemployed, certain physical or mental challenges or disabilities. And as you can see on the screen, there's 4 or 5 other target groups. Now, I'm going to give all of you some ultimate metrics, the under-promise, over-deliver numbers in terms of who qualifies and what you can expect with regards to hiring folks in these target groups. And I'm also going to come back to 2 of these target groups when we talk about COVID-19 and the effect that it's had on the WOTC program. But again, knowing we have a wide audience today of people, different comfort levels of understanding this program, I wanted to break down a few analytics or numbers that'll help put this conversation in perspective. So every year, there's over $1 billion in certified WOTC that go to employers. Over $1 billion gets certified because there is something that's official. These credits ultimately become certified when you have earned a dollar amount that gets applied against your federal tax liability. And that billion is made up of 1.4 million certifications. So as I was saying with some of the numbers, these credits add up quickly. However, this is why the CertiPay team and the HIREtech team, we do these webinars together. It's because less than 10% of the businesses in the US today have a WOTC process in place. I don't mean less than 10% use HIREtech. I mean less than 10% actually do anything for WOTC. Yet you can see by the results, there's a lot of money to be had if employers were utilizing and maximizing this program. So some more high-level WOTC breakdown vocabulary of how it all works is there's something called your screening compliance. So basically, compliance in the WOTC world has nothing to do with HR, do's and don'ts, good and bad. It means how many people did you hire and how many people did you get to screen. So you want to strive and aim for 100. I hire 5 people or 5,000 people. I want every single person I hire to screen for WOTC. And then this is what I mean by the under promise, over deliver. The eligibility that Department of Labor says varies from roughly 15 to 30%. So we've always used the metrics of 20%. 1 out of every 5 hires is going to be eligible for one of the target groups. And that's a universal number that's never going to get you in trouble, if you will. Again, wide audience on this webinar today, different industries that you're all in. If you just look at it from the perspective of 1 out of every 5 of your hires is going to be eligible for one of those target groups, that is an awesome train of thought. And then again, I'm going to get into what's going on with COVID and how that can grow those numbers. However, from that 20% that are eligible, the certification rate national average is only 48%. And like I was saying a minute ago, everyone, certification, that's something that makes this credit official. That means that you have won, that you have a dollar amount to apply against your taxes, yet the national average is only 48%. And the average certified credit from a national average, a non-HIREtech average, is in the ballpark of $800. And I'll explain a little bit more about that in a few minutes. So to all that's going on, the WOTC process is the following. It is screen the new hire, submit some paperwork to the states, and then ultimately obtain a certification. So it is that simple and easy. That concludes our webinar today. No, I am totally joking. Do not hang up the phone on me. If the process was that straightforward, then more than 10% of businesses in the US would actually be going through the WOTC process. So let's break this down a little bit more. The screening process. You have to screen your new hire to see if they fit one of the 10 target groups on or before the day the job is offered. This is a new hire credit. And to that point, employers have to fill out 2 forms. The official WOTC screening form with the target groups is the 8850. And as you can see on the screen, that is your typical scary looking government form that basically asks the new hire if they've ever been on food stamps, if they're a disabled military veteran, and a whole bunch of other questions. And then there's usually a form that's required called the 9061 that basically says, I can prove myself that I am qualified or I do fit one of those target groups. So I can prove to you I am a military veteran, that I am an ex-felon, and so on and so forth. So although you have to screen your new hires on or before the day the job is offered, you then, if you're doing this manually, you have a 28-day time frame to physically submit the paperwork to the state workforce agency. Because although this is a federal tax credit, every state in the US has their own state workforce agency, SWA, and that's where the WOTC paperwork gets processed, submitted, and certified. So federal credit, but it's handled on a state level. And then from there, everyone, it doesn't guarantee, just because you hire a qualified military veteran, it doesn't guarantee that you're going to automatically get a certified credit. And that's why I have the alarm clock on the screen. And what I mean by that is the new hire has to work the minimum number of required hours. You have 12 months from the first date of employment to get them to reach the minimum number of hours worked. So if I hired somebody today on August 24th, I have till August 24th of 2021 to get that eligible person to reach 120 hours worked, 120. Does not matter if they are full-time, part-time, seasonal, hours are hours. So if I have somebody that works 119 hours for me and they quit or get fired, I will get $0 in certified WOTC. However, at 120 hours worked, I start to earn partial WOTC going back to hour one. So you don't lose the first 120, you just have to get to it to start getting partial WOTC. And then you get the highest dollar value of a credit once that person reaches 400 hours worked in that 12-month time frame. And there's a formula that spits out the dollar credit, the certified credit that you'll get. But one of the great things about the partnership between CertiPay and HIREtech is that you don't have to pay attention to that screen. We receive the exact payroll data that we need for our mutual clients. So you don't have to send us reports or go to your operations person or run anything special behind the scenes. That's just another aspect of the strength in this partnership is we get the information we need, the hours and the wages, and in real time, we are remitting everything to the SWAs, making sure that you maximize and earn your credits as quickly as possible. And again, going back to the dollars that are on the table, the way that it works from a WOTC perspective is it's based on the target group. So if I hire a qualified military veteran, ex-felon, food stamps, long-term unemployed, it varies. When you maximize your 400 hours worked, those credits range from 2,400 to 9,600 per employee per certified credit. This is real money that we're talking about. And again, I know I shared some of the national averages in a few minutes ago. I'm going to give you the ultimate under promise, over deliver, so you can picture and see what this will mean for each and every one of your businesses. And again, that's why we do these webinars together, because you guys unequivocally win when you implement and work with the HIREtech tax credit process. And to that point, it's called HIREcredits. We're based out of Houston. We built this ourselves. We don't do everything for everyone. We do 4 things as a company. And the software that we built is called HIREcredits. It handles all tax credits. And to put it in perspective, when I say that you win hands down, in the beginning, I shared some of those numbers and averages. So 1 out of every 5 of your hires is eligible. National average for cert rate is 48%. National average per certified credit in terms of a dollar amount is in the ballpark of 800. In every state in the U.S., HIREtech has a 70%, 70 or higher cert rate. And we average an also U.S. leading $1,200 per employee per credit. You can't compete with that. We're 22% better and more effective at what we do than the next closest person that does WOTC. And again, because employers have so much on their plate, what we see is if you're trying to do the WOTC process manually, the results are even less than the 48%, just because it is such a time-consuming, labor-intensive process. And there's a lot of reasons behind the scenes how HIREtech is able to drive the success rates that we have year after year after year. I'm going to show you what the process looks like in a second. We also fight on your behalf. Our government relations director at HIREtech, who works in Houston, she was a state workforce agency coordinator for about 20 years. So her job for about 20 years was processing WOTC submissions in her state. And this is, if you will, her second career, and she's our government relations director. So we understand every fine detail of what the SWAs want. We work with them, we fight on your behalf, and that's just one of the very, very top things in terms of what we do to help drive the results you see on the screen. And another key aspect of our process that's going to benefit you ultimately and make it a lot better for your new hires is we don't give them the scary government 8850. It's not, hey, welcome to the team, fill out this scary government form that's kind of asking if you've ever been on any types of assistance or these things in your past. Please just answer the questions. It's not like that. We have a confidential, less than 3-minute screening process that is also mobile enabled. You can do this from anywhere. And what we do is we ask the questions that we need to know about the target groups, but we make it calm, cool, and collected for the new hire. From things like customizing the text that you see on there that says, hey, these questions will remain confidential, we can say, hey, these questions will not impact your employment. Your employer will not see the answers to them. Please take 2 minutes and answer them. We can customize that type of thing to make it very warm and fuzzy and encouraging for your new hires to answer honestly and easily. And then the other big thing is what you see on the screen. We don't ask just black and white yes and no questions. We say yes, no, or not sure, because in our experience, we found that sometimes new hires, they just forget. They don't actually know the answer to one of the target group questions and what went on at what point in their life and so on and so forth. So we treat every not sure as if it's a yes, and we research it and we talk with the SWAs and we make it easier or more well-rounded for the new hire to get that positive outcome of being eligible for one of the target groups. And then here's the really cool stuff. If any of you on this call currently have another WOTC process, if you're doing it yourself, you know that transparency is lacking in this conversation. And it's really tough to know where you're at year to date, what's pending, what's certified, had anything been denied, where your dollars are at, how many hours folks have worked. And that was one of the key catalysts on why we built our HIREcredits platform. It's because transparency is not there, and we make it easy for you guys. Again, mobile enabled, those pretty pictures and charts and graphs. You see everything year to date, year after year to date. It's completely transparent. You can look up things by location. You can look up things by employee. You can see the hours worked by the eligible individuals and drive and make sure that they work to get to those 120 and 100 hours worked. So everything is there 24/7 in real time with our dashboard and the analytics that you just get, because that's what HIREtech is. And for everyone on this call today, one of the other compelling points about this WOTC conversation is that it doesn't cost anything. And what I mean by that is we are in a contingent or a success-based industry. So there's not a fee to actually use our software and screen your new hires. There's not a fee when the credits are pending and we're getting payroll information from CertiPay and we're talking with the SWAs. No fees for that. Only when the SWA certifies the credit. That is the only time that invoicing occurs. And you on the employer end always keep 100% of the certified credits that come through. Every dollar down to the penny of a certified credit, you are applying against your federal tax liability. All we do is look at the numbers that are coming in throughout time as they're getting certified and they're growing, and we send an invoice at 15% of whatever those numbers are. But you keep 100% of the credit. And it's such an overused phrase, but this is the ultimate win-win, because at the end of the day, taxes are due. And I often joke with employers that you want to get a bill from us because the invoice is going to be much smaller than the value of the credits that you've now lowered your taxes by. So it really is the ultimate win-win with regards to how it works and the impact that it has on your business. And you know, I would have said those same exact words forever. And it's even more important now during the pandemic, because as we all know, so many businesses are struggling. The world is not the same. I'm not going to use the new normal, get back to normal, that sort of thing, but it's tough. But the fact of the matter also is employers are starting to hire again. And those are the trends that we've been seeing pretty consistently over the last few months at HIREtech. And why this conversation today is especially impactful to all of you on this call is when I said in the beginning that this is a new hire credit. The government has not changed their stance on this. If you let somebody go during the pandemic, for example, and you bring Sally Sue back, you cannot screen her when you bring her back. You were supposed to have screened her on or before the day the job was offered back when you originally hired her. However, the reality is with over, it's sad to even say this, but with over, I believe it's 50 million people have now filed for unemployment, it is a very fair assumption that the person that was let go from Acme Corp isn't necessarily coming back to work for Acme Corp. If I worked in, say, the fast food industry and I was let go and I have an opportunity to work for another fast food place because they're hiring now, I'm going there because I'm going to support my family and I'm not going to wait. So with that said, everyone, because a couple of the target groups are food stamp or SNAP benefits, and the government loosened the restrictions for what it takes to qualify for SNAP back in March, April. There's now more people than ever on those benefits, as well as long-term unemployed. So if you're bringing back folks that were not your original crew, if they're brand new hires, if they came from everywhere, just based on what we know, the sheer numbers, it's a fair assumption that higher than 1 out of every 5 hires is going to be eligible for a target group. So that's why having a WOTC process in place now is even more impactful than ever for employers in the US. And as Trixie mentioned in the beginning, I believe, type any questions in with the time we have left today. We'll be more than happy to answer as many as we can get through. And if we run over, we'll just get those answers over to you after the call today. But don't hesitate to type any questions into the chat box, and we'll go through those at the end. So that said, let's move off of WOTC and let's tackle the research and development tax credit program. So R&D, another long-standing credit in the US, and a lot of exciting things changed about 5 years ago during the PATH Act, Protecting Americans from Tax Hikes. That was the name of the program, and part of it made the R&D credit a permanent part of the tax code. So research and development, it is what it is. It's not up to anybody's, hey, should it come, should it go, should it change, like these state or local programs. R&D is a permanent part of the tax code. And the other thing that the PATH Act did back in 2015 is it opened it up to startup businesses by allowing them to apply the credit against their FICA payroll tax. Because traditionally, this was another federal tax. You're lowering your federal tax liability. So that was difficult for startups because they typically didn't have a tax liability. So part of the PATH Act, if you qualified to be a startup, you could apply this against your payroll tax. And again, startup doesn't necessarily mean I opened my doors yesterday. There's a threshold and a criteria for what truly qualifies you for a startup. But at the end of the day, the fact that you have the traditional sense of what qualifies for R&D as well as the startup parameter, this now opened the credit up to a lot of businesses that couldn't earn the credit previously. And the phrase behind R&D, everyone, is if you are a business that develops new or improved products or processes, then we should chat further about the R&D credit. So remember in the beginning, WOTC was socially or economically disadvantaged individuals. The phrase behind R&D is developing new or improved products or processes, if that's what you do as a business. Now, again, we have a wide audience on the call today. So just to put it in perspective, what new or improved products or processes means. Folks that are in the software space, really good fit. Biomedical, really good fit for R&D. We see manufacturing being a great fit. Same thing with craft brewing, and you can piggyback off that and say distilleries and wineries. Architecture firms, the list goes on and on. But again, it's folks that are developing new or improved products or processes. So if you are technical in nature in terms of the core functionality of your business, then there is a good chance that you are doing activities that would qualify your business for the R&D credit. And with that, like I rattled through in the beginning, everyone, is there's a lot of other moving parts to this tax credit story. And again, we wanted to paint with a wide stroke today. And that's why we do quite often these types of webinars and get as wide of an audience as we can, is that there's other things that may pertain to you as well. And one of the other tax credits that's pretty popular, I guess is the best way to say it, is the cost segregation tax credit. So if you're listening to this webinar today and you own your own building, if you own any other commercial properties, if you have a long-term lease to your building, and you've made improvements to your building, then there's potentially a tax credit sitting there in front of you. So what cost segregation is all about is it appreciates the depreciation schedule, accelerates the depreciation schedule that businesses face. So example, any of you on the call, you bought the cool building in downtown and you completely had to gut it and remodel it to fit the specifics of your industry, then that's potentially a cost segregation opportunity. And I say in downtown, it doesn't matter where it's located, but if you bought an old building, you had to tweak it in electrical and knock down walls and completely revamp it and make improvements to it, then there's potentially a cost segregation credit there in front of you. And again, there's other credits like disaster relief credits, and it's unfortunate, just like the unemployment story, that we even have to talk about this today, but the facts are the facts. And I mean, over the last, call it decade, there's more and more natural disasters that have occurred in the US. And back in December of 2019, it was back 20th, 21st, I believe the exact date was, the government rolled out a whole bunch of natural disaster credits. And there was about 18 of them when it was all said and done. And it's not the first time that we've seen this. Good example, I mentioned HIREtech being in Houston. A couple years ago, Hurricane Harvey, smack dab in the middle of where our building was located. So we've been through this as a company firsthand, but also as a tax credit company throughout time over the last decade. And there was about 18 different natural disasters dating back the last few years that got created as a tax credit in December of 2019. So again, wide audience on this call today. If you are listening and watching the screen and you are located in any of the states that just lit up in various shades of blue, then those were the states where any variety of natural disasters occurred, and you could potentially be earning a tax credit because of a past event. And again, dating back the last couple years. So if you're in one of these states, I'll have some contact information for the CertiPay team at the end of this today. Definitely reach out to them. We can investigate further through asking you a few questions about where you're specifically located and so on and so forth to see if you could be earning a disaster relief credit. So in wrapping up today, everyone, I'll kind of start the way I started, I should say, is that, on top of everything going on with the pandemic, just being in business is tough. Part of why we are such strong partners between CertiPay and HIREtech is that we bring value. We look for things that others in the industry are not looking for, and we have your back. And there is a lot of potential money sitting out there to lower your federal and then sometimes payroll tax liability, and right there in front of you. And that's why we do these types of conversations today. So, with that, less any questions, everyone, we will get through all of this craziness together. That's why we are a strong partnership. And that is my proverbial mic drop, wrapping up today's show and tell portion. And now if you guys have any questions, we'll be more than happy to answer them for you. So thank you very much, everyone, for your time. You see the contact info for the CertiPay team. Just ask for the product specialist. You can email that address as well, and we can investigate these programs and get you set up and rocking and rolling with them. So again, everyone, thank you for your time today on this Monday afternoon. And with that, I will toss it over to Trixie and see if we have any questions to answer.
Perfect. Thank you, Rob. So we have no questions listed, and you were pretty thorough. So we have no questions listed in our chat box at this time. So again, thank you for attending, everybody. Once we've concluded, if you have any further questions, please submit those to the products@certipay.com email, and we'd be happy to be in contact and answer any questions you may have. And once again, thank you, Rob, very much.
You're welcome. Thanks, everyone. Stay safe. Talk to you soon.